Here's a quick example of some things we've run across that can be common, but also aren't overly complicated. So number one is we are looking at that tax bracket and your income maybe fell into the 32% tax bracket. We want to look at what you can do to be able to get yourself down to that 24% tax bracket. And it ultimately depends upon how far you got into it, but no matter what, every dollar that you're deducting against it, you're deducting against that highest tax bracket, both federal and state. So I'm using federal numbers right now, and it could be as simple as if you have the ability to save a little bit more into your 401k. Now there's many things that can be done, but that's an easy to understand example that you are able to defer your income through 401k savings. Another would be on the stock plan, where maybe you had to sell stock when you needed to buy something and you were forced to take short-term capital gains, that those were taxed at 32%. You can create a planning strategy around it, if you know when you're going to need the money, that you want to convert those capital gains down to a long-term capital gain that maybe would be taxed at 15%. So every case in these two are very unique, but that's an example where if we can turn short-term capital gains to long-term capital gains, there can be significant savings. And that would be planning around the stock that you have. A third would be expenses can equal deductions. It's just, here are the line items of all the expenses you have. What are things that maybe did that was a deduction? What are things that could be a credit? Just have a complete understanding of all the things that are going on in the tax year that you're filing, that you get your max deductions, your max credits. And then on the tax timeline, it could be just, this is how I'm saving into a 401k. This is how I'll be using IRAs or Roth IRAs, is understand that sometimes investments are just going to be taxed. And if you know that you're going to be maybe saving 10% from being in a 401k, but it would save you 20% long-term if you moved into a Roth IRA, that's a strategy. So it's understand how we use the savings and the timeline and plan behind it. So this is hopefully an example that would make sense, but different things for sure that we look at.